Good evening, everyone. I'm going to give all participants about 1 to 2 minutes to join. I know sometimes, usually it takes a little longer depending on the bandwidth of your internet to be able to come in and log into the webinar. So we're going to let other folks, we'll give them a minute or two to join. Okay, so it looks like it's been 3 minutes. We're going to go ahead and get started. This webinar is being recorded, so if anyone does jump in late, you can definitely reach out to us and we can provide you with the link if you've missed any slides from the beginning. So again, good evening and welcome everyone. Thank you for joining us this evening for the second webinar of your Pathway to Home Ownership webinar series with our partner, Bank of the West. Today we'll be discussing banking basics. I'm Suhey Mojica. I am the Senior Coordinator of Business Analysis of the San Pablo EDC, and presenting with me tonight is Emma Biggie from Bank of the West. But before we get started, like I said earlier, this webinar is being recorded. A recording will be available on our website at www.sanpabloedc.org. Any resources mentioned during the presentation will also be available if you need it. We welcome all your questions. If you have any questions, please type them in the Q&A box or in the chat box, and we will answer them at the end of the webinar. And just before I introduce our presenter today, I just want to give you a little bit of background in regards as to who we are as an organization. Again, our name is San Pablo Economic Development Corporation, also known as SPEDC. We are a full service organization for economic growth in Contra Costa County and also in Alameda. We are here to help you establish the critical connections that you need to succeed in our diverse business ecosystem and also within the workforce ecosystem. San Pablo EDC also provides a broad range of affordable housing opportunities and services to enable low to moderate income residents to gain better housing and financial stability. We also offer various workforce programs from career training funding, childcare funding for working residents, on-the-job training, and much more. If you would like to learn more about all of the programs and services that we provide here at San Pablo EDC, you can either, again, visit our website, or you can call us at 510-215-3200 for more information. I will also have that contact information at the end of the webinar. And just to get started, again, this webinar was possible with the help of our wonderful partner, Bank of the West. We are grateful for their partnership and collaboration with San Pablo EDC. Our presenter today is Emma Biggie from Bank of the West. She is the Vice President, Community Lending and Diverse Market Business Development Officer. She will be going over the banking basics that every family or individual that's looking to get started and get ready for the home buying process. Banking is a big factor. So she will be going over those basics today and how to prepare. So with no further ado, I will turn it over to Emma. Good evening, Emma.
Good evening, Sohee. Thank you very much for the introduction, and good evening to everybody. So I need to share my sorry, share my
no problem.
Screen, the slides. Okay, so share in slideshow from beginning. Let's show. Oh, it's frozen. Can you see it? Okay, wonderful.
Yeah.
Okay, excellent. Thanks, Sohee, for the introduction. Hello, everyone. This class tonight, I would like to provide some information about banking. I know we talk about homeownership, but somewhat we need to fall back to the basic to start the saving. So for doing that, we are opened up a new chapter focusing on how we started the saving and understanding some basic regarding the financial market and the financial institution provide the services and product in that respect. So before we get into the technical information, I would like to point out something on this slides actually is nowadays creative banking. When you read this slides show to say a checking account for climate action, and we donate 1% of our net revenue from the account to 1% of a planet at no cost to the customer. This is the our statement for our current this year's Bank of the West banking product for this. So basically, everybody open a checking account. Whatever the money saving for that, our net revenue, we donate 1% that to contribute to save the planet. So this is the very good example to tell us today, nowadays, the banking is changing so much. We actually can making the banking product and services connected to our day in, day out life. Now, moving on is beginning, I have to do the disclosure, the class here. So basically what we talked about tonight is of a general information. There's a lot of information, all the banks, not just the Bank of the West are using, pretty much all the banks are using, because bank is one of the industry highly regulated, highly ruined by the law. So a lot of product business conduct are under the same guideline. Now, let's get into the technical part of tonight. I know we have quite a few slides. So some slides that we may spend a little bit of time. The other slides are of general information. So just to get it, remind everybody, we see that day in, day out, but we may not pay enough attention this is just kind of like emphasize or stress point for everybody to say, aha, this is what we have every day. So what is the bank? The bank actually is an institution provide financial product and services, especially related to depository services, and provide a platform for public to manage the money. Let's look at it as what's this banking involved institutions. There's basically it's two. Actually, it's quite simple. A lot of people say, yeah, depository. Maybe I heard, Ed Jones and all these different names. So, who are those financial institutions, especially involved in depository? In general, there's only two: banks or credit unions. So banks and the credit union, there are two different business identity. This is something people may not knowing. We just put this out there is banks is for profit. Credit union is nonprofit. So banks are considered everybody coming in doing the business is customers, and bank making money out of a customer's product and services. Credit union, the people come to the credit union doing business, they consider is members, is a community. So there's a members, there's a membership, and that's slightly different. Just like we go to the credit union, more the setup is like we go to the gym, is a membership. We also need to pay the member to join that, and then to gain the benefit of the services and the product. So that's something. And also both these institutions are depository institution. They receive money, they accept the money. They also, on the flip side, they lended money. So moving on, because they both are depository financial institution, by the regulation, they being insured by federal. So on the slides, there's two signs. FDIC is the regulation unit to regulate banks. NCUA, actually the National Credit Union Administration, is regulate all the credit unions. So those two are the regulatory agencies to monitor and regulate those two institutions. When you see this two sign on the banks or credit union, what that mean to us? That means is that each one of them is going to insure $250,000 for per depositor if the bank has in case the bank failure. So that's something to tell you the money in the bank is safe. Of course, if somebody said, well, I have a more than 250,000, basically we're talking about this 250,000 is cash money in the bank, is deposited. You're not using that bank, using this money for any other financial vehicles to generate more income. In regular day or in routine life, guess what? All the banks, if you have a more than $100,000 cash, all the customers is going to be approached by the bank to say, can we do something about this money? Because bank also wants to seek the opportunity to utilize the money for some other purpose. So with that said, normally people don't have that much money cash in the deposit account for a long time. So one way or the others, people are trying to manage that money. But just for information, if you see these two signs, you know all the cash in the bank, the limit below 250,000, all the money is safe. And if a bank failure, the consumer is got paid. Product and services available at these financial institutions. We're talking about the two, banks and the credit union. What are those? There's also two categories. One is category is talking about deposit. Deposit, you can see on the left side, we have a savings account, checking account, CDs, and money management, money market account. So those are the accounts handling the cash. On the right side, the institution handle we call the credit, actually involving lending. So that's a two basic category there too for people using the financial institution. We know either we doing cash business more to find a place to store money, to transfer money, and also to manage money. That's the main thing we're using banking for the cash business. And then for the credit, which is involved the lending as consumer, we borrow money from the financial institution to resolve our financial needs. This is something to illustrate what this product and services involved. A lot of people already know this. Everything we're dealing with, check cashing, money orders, cards, all kinds of cards, debit cards, prepaid cards, cashier's checks, credit cards. So those are the services that the bank, those two institutions offer. Now, besides these two institutions, are there any other institutions also handle people's money by cash or by lending? Yes, but their scale is much, much smaller. So what we call depository, that means it's all the institutions somewhat handle the cash money ins and outs. So convenience store, post office. So this is a very common places. They also handle our cashes, and check cashing stores and outlets. So this is kind of like a payday stores and those, and payday lenders. See, all these people, they handle cash and they also handle lending, but the scale is very minimal, is a small, and transaction is a small. So that's something is they consider is a banking industry, but it is not really mainstream. So we are talking about the main banking are still related to those two category institutions, banks and credit union. So why we need to do the banking, understand the banking, as I said, we need banking to cash part. We need to find a place to store money, to transfer money. And then for the credit piece, we're talking about to borrow money, to lend money, and to spending money. So that's the main thing about capitalism. But everybody heard me say, oh, cash piece, we know when you talk about lending, why you see the word is credit. So this is something we need to give a clarification. In the finance world, the lending piece is more talking to consumer, but actually in the industry, we talk about a credit business. Why is a credit business? Credit basically is we gave money first to the consumer, to spending, and then ask for payback later. In this processing, you will see there's a relationship built up. There's a trust built up. So the lending piece, not only just lending money, but also related to building the consumer's credit worthiness. So that's the other section later on. We are talking about how to build up a personal credit. That's related to the lending piece, related to the credit piece. So talking about manage money related to the banking product and services, we need to look at it, what we need. We need for store the cash, transfer the cash, spending the money, lending the money. We cannot avoid to go in deeper to looking at the specific banking product and services accounts. That's what we talk about is, hey, do you have accounts with us? Do you have accounts with this so-and-so? How much money in the account? What's the average balance transfer in the account, in and out? So those talking about accounts, by talking about managing the needs and do the accounts, we already mentioned a couple of things, save the money, store the money, transfer the money, borrow the money. Opening the accounts, that's start the banking, that's the starting point of a banking, also is the relationship entry point. When we open the account, we literally start our financial journey with the capital system. We're not just open the account itself. There's a lot of things behind it. As a consumer, we need to be aware. Of course, for opening the account, the financial institution provide the convenience, provide the platform for us to manage the account. But behind the curtain, we also need to be aware there's a consumer protection, and also there's a security insurance, and also some of those account has a earning money generation function, which is going to help us to generate more money if we have the money saved in the institution. Here is the thing is, for learning the rules for the account is first and foremost, keep a track how we're using those. In the banking, generally, we're talking about two types of accounts, checking and saving. A lot of people actually doesn't really define the line or get this clarification. Why every time I open the account, they always come in as a pair? They always, once we say you open the account, the bank is going to checking account, and they also attach to a savings account behind it. Why is that? So here is a clear definition is checking account is for transaction. Savings account is for storing. And also a lot of people may not know the savings account normally, if you has to be the owner of the account to manage to have the money go in and go out. And without owners doing that, anybody else cannot be directly linked to that account because the savings account is not for that purpose. But for checking, you can do that. So in that case is without owner instructed, the bank can be automatically linked to the outside by the checking because the checking account has that function. And also money in the saving, because it's a saving as the name says, they would not like to see too many frequency of ins and outs for the transaction. The checking, we will see all the transactions in and out, so the tracking will be much better. And also savings account is going to bear the interest. And that's very, very important. A lot of people say, well, I may not like how much savings interest they're giving to me. Well, little is little. If we have certain constant money balance in the account, that will accumulate quite some through a long period. Applying for account, you have a lot of steps. On this, applying for a checking or savings account or banking relationship, as a consumer, you do need to make sure there's a couple of things to pay attention. First is from the bank side, they want to verify who you are or who we are or who we see we are. This is a very, very important. That's why the identity theft and everything is going to start it from here. So the bank wants to know the customers are legit and open the account, everything follows is for real. So that's why this piece is very important. A lot of account opened, consumer may not know. Once you open the account has to be verification, re-verified 3 or 4 times to make sure the customer background is checked and verified and legit. The other piece need to be aware is when you open the checking account, there are some choices we can make as a consumer is opt-in. This opt-in to do the options about some certain service we have or we don't have. If we opt in, that means some certain bank services is going to be automatically to apply to us. But if we opt out, that means that services is there, but don't assume that service will be automatically applied to us. Why this is very important? Because nowadays, one of the popular problem is the option for overdraft protection. A lot of people make assumption, include the people in the banking business, in the banking industry, they are not in the specific handling the products. They work for the bank, but they are not in the on the corporate level or behind the curtain. They don't know the specific operation. They don't know this piece is for the overdraft protection. You have to be purposely opt-in. You have to make that choice. If we do not make the choice specifically, and that considered is we opt out. If we opt out, that going to have a consequences is if something happened, the overdraft protection is not there, we're going to being charged the fee, and also the fee is quite hefty there. So especially for regular, working class, low moderate income area people, make paycheck by paycheck or tight financial situation in the household, this is the piece is need to pay more attention. The other part is ask questions, because financial product is not like any other merchant product. You can see, you can touch, you know how to using it. The thing is, we only know the surface, but we don't know a lot of behind. And if we don't ask questions, we don't even know what this thing can do to us. Don't wait it for the fee is charged or something, the account has a problem, is hitting the records, lose some other credit and things like that, is affecting our decisions or affecting our life. And then we realize is, oh, why you do this to me? We waited, we don't need to have that why to save it for the end and to find the solution. We need to resolve that why at the beginning. So ask questions. That come up with some challenges we know. So a lot of people, they can apply for a bank account. To be honest, quite some percentage of people, they may be turned it down and to say, well, at this moment, we want you to working on your finances a little bit. You may coming back to open the checking account. Why? Because there are some certain things may not be fitting for the customer to open the checking account or open the account relationship. So for that, we do need to ask a question to find out what's happening. And also, every account, the nature of the account, the structure of the account, the designing of the account is slightly different. You need to find out the account will meet our own needs. If we are very financial conscious for saving, we do not want to spend too much money just to maintain the money be there. You got to be careful and checking the cost effective about this, a cost effective way about the maintain the account. And also some people may say, well, if I have some certain credit issues and something, somebody may put a judgment against me, has a bad records. When we do the double checking, that records can come up. If that come up, we may consider, I'm saying we as a bank side, we may consider, okay, this customer may not be the best choice for establish the banking relationship. We need to talk this openly, so to help our consumer understand what's the problem, and then we can find a solution to amend the issues and to help you to do a healthy financial journey. Like this slides, we call it a second chance checking account. That's normally is in the banking history report. Believe it or not, everybody has his credit report, but also everybody has a banking history report. That report is related to your banking history. Unless you are totally brand new person, we still need to check, are there any history related to this person? If there's no history, you are a brand new customer, that's okay. But if you do have a prior banking history, and that banking history will show how good your history is, will give the next bank some reference. If the bank consider that history is not satisfied, they may consider to put you on some certain restricted account. That's what we call the second chance. The second chance is they want to see whether this account has maintained a leveled account balance, and also expected the transactions so much so. So in that case, they do not want to say this person to repeat the mistakes and errors before. Talking about the saving, we already discussed this, is by savings account, the most important thing is savings account designed for save the money, store the money. So the account itself bear the interest, and also they do not expect the savings account money is going to have a lot of transactions in and out. They expect it to be in, but it's not out. If you're using saving as the transaction in and out so frequent, you might move that money to the checking account to do that, because the tracking is much better, and also that's the account designed for that purpose. Now goes to using the checking account. There's a lot of not just the money in the checking account doing the transaction. There's other things will linked to the checking account related to the transaction. For example, the cards, pre-loaded card, prepaid card, or credit card payment, or the ATM card. Those type of a card is definitely linked to the checking account, because those are considered as transactional. Talking about nowadays, the checking account has the good benefit for the people to using it, especially to be safer for the consumer and for the bank. The bank would like to see we have a direct deposit. Why is that? Because direct deposit is going to guarantee the account activities and account money replenishment. So that's the good thing for the bank to see that, because direct deposit is going to guarantee the use for the money out of the account. And also automatic bill payment and the debit, that's another good function for us to use, especially nowadays. Guess what? I have one slide page talking about checking, talking about checks. But I know nowadays, except we're involved the account payable business or some specific usage for the check, majority people don't use checks anymore. So what we're going to do, pay the bills. Well, bill pay for the checking account will be a major assistance there, because we literally can set up this bill pay. They just act like old-fashioned writing checks to the payment, but it's more convenient, more safer, and also be more on time. So we don't worry about the checks got lost or is paid late, because once we set it up, that check regardless is going to be out on time. Nowadays is everything is a computer generated. Talking about that part, funny part, I would testing everybody. This is the traditional check. And do you know all those points? What do you put in there? So technically on the bottom, there's two numbers there. The first number actually is a routing number. That's a bank's routing number for money transfer. So a lot of people nowadays are still confused because we don't use the check. So we don't know which one is a check number, which one is routing number. So the first one is always a routing number. The second series digits, that's the account number. And the last one, the last set of a number actually is a check number. You can see from the number on the bottom and the number on the right corner, upper right corner, that's a check number. Why we need to have a check number? Because in the old time, we gave you the checkbook. That's the tracking system. So if we write a check on the 101 and cash down 101 and 103, and you got to figure out where you send it to the 102, right? So that's the tracking system. Of course, on this check, you do have the date, the money paid, and who you paid to. So this is something for the bank to keep tracking, and also for us to know who we write the check to. If you do the online bill pay, the system exactly reflects what we're saying on this traditional way, but it's just a modern way to keep the track. Debit card, no need to worry, too much about the detail. Basically, debit card is linked to your checking account. One thing, a lot of people say, well, I can use the debit card as a credit card. Yes and no. They can still using the credit network, but the money actually is going to go out of your checking account. That's directly. So debit card is more you thinking is using as a cash. The good piece is it's a safety issue. You carry the plastic is more safer than you carry the green dollar. So that's gave you some safety comfort there. And also the card transaction, not only you do the transaction, you can actually easy to get money all over the world. So that's the convenience too. Now we got into this overdraft. So overdraft, we talked about the consumer's right to opt in, opt out. Just remember when you open checking account, this piece is a specific you have to mention until today. Even today, you open a checking account as day one, you need to mention this to the bank officer to say, just to verify to say, do I have the overdraft protection? A lot of accounts, they are going to automatically to give you this, but for some basic account, they may not give this overdraft protection. So you do need to ask that question. So what is the overdraft? I got a funny person figure here to do the example. So basically, for example, March 1st, April 1st, we're going to have a transaction for $15 birthday cake, $25 gas, $45 phone bills on auto pay. Because on that day, all this money is going to be out of your account. But guess what? At this moment, the checking account is only have $50. So if all those bills cashed out, that means is I spend more than I have in the checking account. So for the merchant not to stop the transaction. In other words, is the birthday cake, you have to pay to take the cake away, right? So for the shops to give you the cake, they want to make sure the payment is done. The bank can cover that payment. That's to cover your the transaction. But because we don't have enough money there, and the bank doing this for kindness to cover that, and in the back, we need to pay the bank to cover the shortage for the money and also for the transaction fee. To avoid that transaction fee, we need to say we want to have the overdraft protection. In that case, we can save that the fee and just pay back the shortage piece. That's a save a lot of money. To be honest, today there are some consumers forget this, and we are going to have overdraft charges. Card type, we all know prepaid card, credit card, ATM card, all those store card, all kinds of cards. And the cards has benefit to mileage, hotel, personal insurance, auto rental car coverage, all those good. So card services is a major money-making services for banking because it's very lucrative. Once you spend the money, the service charge, not only for the money we using the card, they also charge the merchant to doing the card transaction. So bank has, that's a money-making vehicle there. But for the consumer, we do need to know the card provide a convenience for us, right? But also there's a certain consequences we need to know. If we are using the ATM card, the preloaded card, those card we're using the money is a cash in hand. So we worry less. If we have the money, we can spend on the card. If we don't have the money, the card will be rejected. Actually is going to stop us to spend overspending. That's a good money management. But on the flip side, if we're using the credit card, guess what? Credit card gave us is a credit. It's a money gave first and we return the money later. So we want to watch out our spending limit to make sure we have the money to recover that card. That's always the old saying say is we have to spend the money within our mean. What that our mean is the certain limit. And also to be aware for those type of a credit lending card we're using, there's a relationship behind, there's a trust behind. If we pay the money back on time and with the satisfy the repayment requirement, we have a good credit set it up. And the trust is set it up, the relationship set it up. So there's something is we can work on those. So just don't ignore, we're just using the card because the card means a lot to us. Secured credit card. This is one special card I would like to spend a couple of words here because this is the piece when we talking about building the credit. This is one way to help a consumer to build a credit. Either the person has no credit to start it from ground zero, or the person had a credit before, has been ruined and reestablish the credit. So the secured credit card is one vehicle, is very safe and also is very fast to help consumer to rebuild credit. So what is that is normally this is secured credit. The secured part is you open a savings account with the depository institution. And because you have that savings account, put an equivalent money amount there as the security. So the institution will issue a card like the credit card, but linked to that security. in term. And then you can using that card, just like a conduct of a credit card, pay back and using the card again. That transaction cycle will help us to build our credit. So later on, the institution will replace that secured card with an unsecured credit card. And that's a real secured card to help us to carry on our credit journey. So that's a very, very important to help us to build up the credit and also within the short time. For example, if I only have a one credit card I'm using, I don't have any other credit card or credit background. So sometimes my credit history is too thin. And for other lenders to see my credit, they may see me as not a strong candidate to borrow money. But I do need to borrow money. So what I can do, I can using this secured credit card instantly to build up this credit within 6 months to 10 months. So that will help us to do a lot of life planning and doing some other things, doing what we carry our life plan. Prepaid card and debit card, what's the differences? Debit card apparently linked directly to our checking account, directly to our deposit account. And a prepaid card, that's just the card itself. You preloaded the card with the money, and the card has a limit and is hard to stop once the money is used up. Tips for using the card is review the account more often and make sure all the charges belongs to you and you using it, not somebody else's, because sometimes credit card can have easily made a mistake. For example, just very easy example is we always go to restaurant, right? Sometimes we go to the restaurant, we say, oh, we open up the tab for some casual drinks. And guess what? You will see all the cards is on the counter behind the bar, a line of cards. But for sometimes it's a quick transaction and they just the wrong tapping, it can make some transaction into the wrong card. So that is error for you to spend money you don't even deserve, didn't get the service or get the product. So that's something you need to keep an eye on that and monitor the card charges and also understand the limit. That's will be the big thing. And try to understand what's the fees and cost associated to using the card. Normally, especially be careful is guarded that card and do not lost or prevent the theft happening, because nowadays once you're losing the card, you're not just losing the money. Sometimes you're losing the personal identity. So with that said, we are pretty much towards the end of the presentation. This is the slides I made it for because we're a partner with the San Pablo EDC. This is the Bank of West, the San Pablo city's the presence. We have a branch there. We also have the multiple ATM site for people to easy access to the money. Once you open the account in the branch, you pretty much access, you're open to online banking. You can go to any ATM to access the money, so you can do a lot. With that said, we are pretty much ended our presentation. At this moment, I would like to check, are there any questions and concerns?
So Emma, thank you so much for that. It doesn't look like we have any questions at the moment, but I did have a question that I usually get from individuals that call in and ask when they don't have credit. You mentioned the secured credit card and how they can open a savings account to start building credit. As soon as they open something, let's say they come to Bank of the West, they open a savings account to secure that credit card to start building credit. How soon or what's the time frame that normally a person would have to wait before they can get an unsecured credit card through the bank?
Normally is it depends how of course it depends how frequent they use the card and they pay back. So pretty much at this moment, the bank say is 10 months, we're going to see the results. So you maintain a good good payment history, pay bills on time and pay off the account. So we want to see how, one thing is pay the bills on time. The other thing is how much balance you carry on the card, right? So if you satisfy both ways, that's even quicker. So normally within the 10 months, we will see the trend.
Okay, thank you. I do have, it looks like my internet is a little bit unstable right now, so I do apologize if I'm freezing or if my audio is a little shaky. But as Emma said, we are in partnership with Bank of the West, and we do have a webinar series this throughout the year of 2022. This is our second webinar. We had a webinar in January. And like we mentioned at the beginning, all of these webinars are being recorded. So if there was a webinar that someone wanted to attend but was unable, we could definitely provide you with that link so that you can look at the webinar or listen to the information that interests you. Our next webinar is going to be on money management, planning, and budgeting. And that webinar will be on May 24th at the same time. Then we also have another one in regards to home equity loans on July 26th. And then we also have another webinar in September. We're going to discuss consumer loan programs. And the last final webinar will be on November 15th. And we'll definitely visit the first webinar that we started with. And that's again, your pathway to home ownership and what it takes if you're looking to buy a first home or if you're just looking to buy purchase a home. So I just wanted to go over some of our webinars that we have coming up. So if you're interested in attending all the series, everyone's welcome to do that. If you need us to send you a calendar, we have a calendar we can share. Just email us and we'll share that with you, or you can visit our website. Having said that, I want to thank our presenter, Emma Biggie, today for sharing such great information as always and resources. And thank you to everyone who joined us today. Again, if you want to follow with any of the presenters, Emma did have in her current presentation slides locations throughout San Pablo where you can find Bank of the West if you are looking to speak to someone personally and you don't know where to go. You can definitely reach out to us and we can let you know what locations are available in the area. Or if you are looking just to speak to a mortgage person, I do have someone from Bank of the West information here. Her name is Maribeth Guevara, but if you are looking for someone more local, there's no problem. We can connect you with someone that usually everyone, if you want to see someone in person. So having said that, again, thank you so much for everyone who attended. Thank you so much, Emma. And again, please join us for the rest of the webinars that we have throughout the year. Please register for them by visiting our website. And I hope that everyone has a wonderful day. I don't know if you want to add anything else, Emma, before we end the recording and the presentation today.
No, it's, thank you everybody for joining this. And I know this is a recording session, so you actually can access this. If you have any questions, just reach out to Sohee and Sohee can reach out to me. So definitely, the most important thing for the banking is really experience type of product and services. So welcome to, visit us, Bank of the West, any branches, and then I can assure you the branch managers and the staff were more than happy to see you and provide their services and product. So see you
Yes.
soon.
Thank you so much, Emma.
Yes, Songhee,
Yes.
is that possible? You can stop the recording. I can talk to you for a second.
Unfortunately, it's a webinar, so I'm not able to. If you want, what I can do is I can give you a call as soon as we're done.
Okay, thank you.
Okay, thank you, everyone. Everyone have a good night.
Bye-bye.
Thank you. Bye-bye.